Hi students, welcome. I am Dr. Majini Jasballa, Assistant Professor, Wales Institute of Science, Technology and Advanced Studies. In this video, I am going to explain about hire purchases from Financial Accounting 2. Calculation of interest when rate of interest is not given. Week 4, Lesson 3. We can see Introduction, Exercise 1 and Exercise 2. First, we can see the introduction about calculation of interest when rate of interest is not given. When cash price and the amount of installment are given and the amount of each installment is same but the rate of interest is not given, the following worked out example will make the calculation clear. Exercise 1. Calculation of interest when rate of interest is not given. Just I wanted to read the question. A machine was sold on hire purchase system on 1st April 2005. Rupees 10,000 was paid at a spot and the rest was paid by 4 equal quarter installment of 22,000 each. The cash price of machine was rupees 90,000. Find out the amount of interest included in each installment. We can see the solution. Hire purchase price. The 10,000 they have given the down payment at the time of agreement they have given. Then 22,000 each installment. There are 4 installment are there. For each installment 22,000. So we can see 22,000 into 4. Down payment 10,000 and the installment 4 installment, each installment 22,000. Total amount we can get 98,000. That is 22,000 into 4, 88,000 plus 10,000. Then we can subtract the cash price. Total cash price which was mentioned in the question 90,000. When we are subtracting the cash price, we will get the total interest. Total price value 98,000. The cash price they have given 90,000. 98,000 minus 90,000 we will get 8,000 rupees. That is the total interest. Then you put 4 column. First column is year. The second column is amount or outstanding at the end of the year. Then the interest divided in ratio of installment. Then the last column is total interest divided in the ratio of installment due. The first year total due is 88,000, right? Because 22,000 into 4 we will get the 88,000. The first year the balance we are assuming that the 88,000. The interest balance is 8,000. So how can we calculate the interest for the first year? Total interest amount is 8,000 into 4 by 10. 4 by 10 means the first year 4, the second year 3, the third year 2 and the fourth year 1. How can we get it? 88,000 divided by 22,000. We will get 4. The second year 66,000 divided by 22,000. We will get 3 because that is the balance for the second year. The third year balance 44,000, right? So 44,000 divided by 22,000 we will get 2. Then the fourth year 22,000. 22,000 divided by the installment is 22,000 we will get the 1. Therefore, the ratio is 4:3:2:1. The first year 4, the second year 3, third year 2 and fourth year 1. So based on this ratio, we are calculating the interest amount for each years. The first year total interest amount 8,000 into 4 by 10. Why? Because 4,000 4:3:2:1. So 4 plus 3 plus 2 plus 1. You will get 10. 8,000 into 4 by 10. You will get 3,200. The second year the same 8,000 into 3 divided by 10. You will get 2,400. The third year 8,000 into 2 by 10. You will get 1,600. The fourth year interest 8,000 into 1 by 10. you will get rupees 800. Okay, this is the interest for all the years. The first year interest 3200, the second year interest 2400, the third year interest 1600, then the fourth year interest 800. Then we can see the second exercise. Just I will read the question. Mr. A bought a machine under hire purchase agreement, the cash price of the machine being rupees 18,000 as per the terms. The buyer has to pay rupees 4,000 on signing the agreement and the balance in 4 installment of rupees 4,000 each, payable at the end of every year. Calculate the interest chargeable at the end of each year. This is the same method. We can see the amount payable 4,000 they have given as down payment, then each installment also 4,000. There are 4 installment, so 4,000 each installment. 4 into 4,000 we will get 16,000 plus down payment 4,000. So 20,000. The cash price of the machine also they have given in the question. The cash price 18,000. So total amount payable 20,000. The cash price 18,000. The interest payable 2,000. 20,000 minus 18,000 we will get the interest 2,000. The amount of this interest 2,000 is apportioned on the basis of the ratio of amount outstanding at the end of each year. Previous sum I have explained you how we have calculated the interest ratio, right? In the same method we are going to apply here also. The first year 4,000 into 4 we will get the 16,000. The first year outstanding 16,000. Okay, 16,000 divided by 4,000 we will get the 4, that is the first year ratio. The second year 4,000 into 3, okay, because remaining 3 installment are there, we will get 12,000. So 12,000 divided by 4 you will get the ratio 3. We will write it in the interest dividend ratio of this installment column 3. Then the third year again we have given the 4,000, the balance is 8,000, that is 4,000 into 2, 8,000. There are 2 installment are there. Okay, 8,000 divided by 4,000 is equal to 2. We will get the ratio 2. Then the final year, the last year, there are 4,000 only, the balance is there. So 4,000 divided by 4,000, you will get the ratio 1. So the ratio is 4:3:2:1. 4 plus 3 plus 2 plus 1 is equal to 10. The total 10. Then we should calculate the interest for each year. First we can see the calculation of interest for the first year. The total interest is 2,000. The ratio is 4:3:2:1, right? The total is 10, but the first year ratio 4. So 2,000 into 4 by 10. We will get 800. The second year 2,000 into 3 by 10. You will get 600. The first year interest 800. The second year interest 600. Then the third year interest. Third year also 2,000 total interest is there. 2%. 2 ratio, right? 2,000 into 2 by 10. We will get 400. Then the fourth year 2,000 into 1 by 10. We will get the interest 200. The total interest is 2,000. The first year interest 800. The second year interest 600. The third year 400. Then fourth year 200. The total interest is 2,000. Thank you.